What happens to your tax filing status after your spouse dies? Losing a spouse is a difficult time, and figuring out your tax situation can feel overwhelming. But understanding your options can make the process a little easier. When your spouse passes away, your tax filing status changes based on the year of death and your personal circumstances. Let's walk through what happens step by step. In the year your spouse dies, you can still file a joint tax return as married filing jointly if you did not remarry during that year. This allows you to combine your income and deductions with those of your spouse up to the date of death. Filing jointly often results in the lowest overall tax bill and is the most common choice during this time. For the next 2 years after your spouse's death, you may be eligible to file as a qualifying surviving spouse. This status is also called survivor or widow in some cases. It offers many benefits similar to filing jointly, like a higher standard deduction and better tax brackets. To qualify, you must not have remarried, have a dependent child or stepchild living with you the entire year, and have paid more than half the cost of maintaining your home. After those 2 years, if you no longer meet the criteria, your filing options change. You will typically file as either single, if you do not have dependents, or head of household if you do. To qualify as head of household, you must have a qualifying dependent living with you and pay more than half the household expenses. This status usually provides a higher standard deduction and lower tax rates than filing as single. When you file as a surviving spouse, you need to include your deceased spouse's name, social security number, and date of death on your return. If you remarry, you lose the eligibility for the surviving spouse status and will need to file as married filing jointly with your new spouse or as single or head of household if applicable. The final tax return for your deceased spouse covers income earned up to the date of death. It is often filed jointly with you if you qualify, and it helps settle their tax obligations. This process can be complex, so keeping good records and consulting a tax professional can be very helpful. For many Asian American families, especially those with multi-generational households or dependents, understanding these options is important. Proper documentation of household expenses and dependents can help maximize your benefits. Knowing your filing choices can also ease the financial stress during this challenging time. In summary, after your spouse dies, you can file jointly for that year, then potentially use the qualifying surviving spouse status for up to 2 more years if you meet the conditions. After that, you will file as single or head of household depending on your situation. This step-by-step progression helps make the tax process more manageable during a difficult period.